PayPal stock, or PYPL stock, has something for everyone. You've got nice growth, you got juicy margins, lots of free cash flow, a healthy balance sheet, and a beautiful inflation hedge where they effectively have a toll booth on commerce. Whereas, effectively prices go up, inflation occurs, they benefit by getting a cut of it, getting a cut of every transaction that goes across their platform. So it is a beautiful business. The question is, why is the stock down over 30%? What is their business? And we'll talk about that in this video. And what do I think about the risk reward from here? What do I think about the valuation potential? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. And so in full disclosure, this is not financial advice. And at the time of this video publication, I did not own stock in PayPal. Now, PayPal is a very special business. It represents a double-sided marketplace that increasingly addresses the needs of hundreds of millions of consumers and merchants worldwide. The root of their value proposition from a merchant perspective is that having a PayPal checkout can dramatically increase the amount of business a merchant does through less abandoned carts and more follow-through. In short, if it's easier for customers to pay, and there are hundreds of millions of customers with PayPal-tied accounts, it means more business for merchants. And you can see the statistics where they talk about, 59% of PayPal users have abandoned a transaction because PayPal wasn't at checkout. So the bigger PayPal is, the more significant their weight becomes. Now, merchants effectively pay for this right of access with every transaction of PayPal-enabled business. So if business effectively has a PayPal customer comes through and they pay using the PayPal wallet, using the PayPal checkout, then they effectively have to pay for that access. And you can, there's a wide range of different types of fees, what they charge for. Generally, it's a few percent plus some sort of fixed fee. This makes PayPal a toll booth on commerce and a beautiful beneficiary of inflation over time. So if inflation rises a couple percent each year, that is fine by them. That pretty much is their top line growth. So if you think there's going to be higher inflation, I'd argue one might say, hey, you should definitely consider thinking about PayPal. Keep in mind, this inflation beneficiary is in addition to secular tailwinds like e-commerce and digital wallets as well that consumers and merchants are increasingly going towards. Over time, PayPal has acquired other valuable merchant services beyond just the digital checkout, like point of sales, risk services, marketing tools, and payment processing. Now, on the customer side, you have hundreds of millions of consumers that like having access to PayPal's digital wallets, whether or not it's PayPal or Venmo, for things like remittance, investing, crypto transactions, bill payments, buy now, pay later. There's an aspect here of a beautiful business model where you offer free services like peer-to-peer transfers that sort of hook the customer, hook the consumer, so that way you have greater weight. So that way you might have folks say, oh, I'm here for the network effect, for the fact that there's other people that I can easily send my friends money. I can easily pay for XYZ via Venmo. And because of that, PayPal will then have greater sway over merchants to say, oh yeah, look at how many people have access to our digital wallets. And that leads to greater acceptance by those merchants. Even Amazon, the retail juggernaut, recently recognized the power of PayPal's digital wallets and will allow Venmo for paying at checkout starting in 2022. Amazon follows several other major retailers like Walmart, Booking.com, and Valero. So it shows you it's well spread across the economy. It's not just, an e-commerce juggernaut. You're looking at Walmart, the offline behemoth. You're looking at traveling with Booking, and you're looking at, very basic like gas services at Valero. So if there's all this good news about PayPal, why is the stock down over 30% from its recent highs? There's a few answers folks should consider. The first is that PayPal's growth rate decelerated significantly in the third quarter of 21 to around 10% growth for their core transaction business. This deceleration was largely part of a multi-year shift where eBay, one of PayPal's largest customers and prior owner, has transitioned their business to Adyen, a European global payments processor. It's unclear to me how much of a red flag this is, as Adyen is growing faster than PayPal with comparable scale. And you can see, their process volume, Adyen's process volume, is up over 60% year to date. They're meaningfully profitable. And so you see those types of growth rates, compare it to what you see with PayPal. And it is a concern just to think, Are they doing something differently that warrants them winning share over time? Does this mean that they are at a disadvantage? If I were a PayPal owner, I would definitely want to have better understanding of this dynamic. And if you have thoughts on that, please leave a comment below. Excluding eBay and PayPal's transaction revenue grew by 23%. So back out eBay, and they're still growing at a really nice clip. Not 10%, but 23%. Now, that's their core transaction aspect. With eBay now only 3% of PayPal's total payment volume, which is down from 7% at the same time last year, eBay really shouldn't be a material headwind for them for much longer. It's a teeny tiny, 3% of their business isn't going to be this huge fluctuation. It won't really hurt the results like we've seen this quarter. I'd argue another core reason why PayPal stock has come under pressure is from a lofty valuation. So on the one hand, you have sort of these dynamics of a quarter with lower growth than folks were expecting, and this sort of headwind as eBay transitions from PayPal to alternative vendors and competitors. The other aspect is things just get frothy, and you can see how much valuation has expanded over time. The chart below is from Koifin, which shows PayPal's historic price to sales multiple. You can see how their valuation multiple expanded by over 100% pre-COVID to the last few months. And keep in mind, this is still 30 to 40% higher than historically. So this is definitely something all investors need to think about, which is that valuations for a lot of these types of businesses used to be much, much lower. Now, what about the current valuation? What do I think about the risk reward from here? And, will it be part of my personal investment journey? Should you consider it as your investment journey? First, a quick plug, where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com. Each month, I call out potential multi-baggers as well as my personal portfolio. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. So once again, if you're interested, go to unrivaledinvesting.com, click join the journey. And if you enjoy learning about exceptional companies like PayPal, please make a point of hitting that subscribe button. So thinking about PayPal's valuation now, it's a $250 billion valuation. Pretty exceptional when you think about $250 billion. Well earned, I'd argue, in terms of that valuation. And I'm certainly not saying it's crazy expensive. When I'm looking at a hypothetical valuation framework, the implied risk reward, in all honesty, strikes me as quite reasonable. It's not something where I'm just like mouth drop to the floor or jaw drop to the floor. I'm like, this is incredible. But I'm saying, yeah, this is very reasonable, but potentially to the point where I need to start thinking about it more seriously and say, hey, why don't I buy this next week? Nearly 200% upside if they continue to grow at like 25% in the years ahead, while only facing slight multiple compression in the next 5 years. That's the sort of the high side, saying, look, if it goes from, let's say, 40s times free cash flow to, let's say, 35 times 5 years from now, because people continue to give this a very, high valuation because folks say this is an incredible business, then you only have slight multiple compression and 25% growth. That leads, plus their free cash flow, gets to, nearly 200% return. So that does strike me as very interesting. Now, management is guiding to 18% growth this year, so that's below that 25%. If you back out eBay, that's closer to 28%, and they're guiding to over $5 billion in free cash flow this year. So that is interesting. I'm penciling out a range of net earnings potential of, let's say, $5 billion plus to nearly $6 billion, a little over $6 billion in potential free cash flow. That's a range partly giving them for credit of future potential multiple or future potential margin expansion that they might be able to achieve, and that management has talked about, aiming for in the years ahead. So this is sort of a range of possibilities how I think about this. Given that PayPal has already proven themselves to be an extremely lucrative business, you could see that the free cash flow is there, that the margins are there. The real $100 billion question, or maybe even the $1 trillion question, is how fast do you think they'll grow in the years ahead? Do you think other players will eat their lunch? They will lose share over time, not grow as quickly. Other digital wallets will, gain prevalence, and that they won't be able to continue growing at, let's say, around 20%. And that's really the crux of this that makes this challenging, because if you say, hey, I think margins will stabilize around the current levels of, let's say, 25% operating margins and around 15% growth in the years ahead. Keep in mind, 15% growth is in the same range as where it's growing this year. Now, this year is, getting hurt by eBay, but that is something to consider. And you consider a 25 times multiple 5 years from now, which is some significant multiple compression, you're really not talking about the same type of return. You're really looking at something that's between, like 10 and 20% return over 5 years, which really isn't that compelling. Now, of course, the stock price can always go lower or higher than this hypothetical framework. A lot depends on their execution. One risk I would say is that if you do have a significant economic shock or decline, then I would imagine that would definitely hit them as well, where you'd expect to see lower growth. I do like this setup a lot, though. I do like this company a lot. It's going to be on my radar. I would expect to look at it and revisit it in the months ahead, weeks ahead, because I do like PayPal. It does strike me as very compelling, profitable growth. The valuation and seeing that historic valuation does make me nervous. When you say, okay, Animal Spirits are putting it to a premium well above to where it previously traded, that does give me pause as I think about it. And honestly, I look for things and I'd rather buy things where I'm like, hey, I really am playing for 200% plus as a upside potential. And like my most recent potential multi-bagger was a company that's crushed the market indices over several decades, and based effectively on what management's goals are and some slight multiple expansion, because currently it trades at a 30% discount to book value, then, maybe this thing can compound and increase by over 250% over the next 5 years. So that's something that I'm making one of my larger positions as a potential multi-bagger. But each month, I'm looking for companies like this, like PayPal, that does strike me as potentially having asymmetric risk reward, really smells interesting. I think I want a little bit better of a multiple. I think if I do ultimately pull the trigger on PayPal, Unrivaled Investing Journey subscribers will know about it. And if this video has been helpful for you, talking about PayPal, their business model, risk reward, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching.